Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, September 11th, 2009. Well, folks, the market started out relatively strong this morning, pushing to new highs for the year, and then all of a sudden slowly started to fade as oil came in very, very hard. Now, interesting things going on in the market today. Number one, this morning we got a little bit of economic news, but for the most part, it was a non-event. The real key today has been the oil front, and I'm going to show you the oil chart before we get into the SPY here so you can see. Look at this drop on oil, folks. Oil collapsing all the way down. Interestingly enough, I went to a negative bias over the last couple days on oil to my premium subscribers in the research center. They had that call ahead of it, and look at the fall you've gotten today. Beautiful fall, while we remain pretty much neutral on gold and neutral on the dollar. So you can see the dead calls on. We picked out the perfect one here with oil to be looking to short and be short on this oil trade, and sure enough, to the downside, it has gone dramatically here. Big drop on oil. That is taking the markets down because remember, oil it really reflects on the oil stocks, the commodities, generally commodities like ExxonMobil. Exxon down 65 cents right here on the 200 moving average. Chevron, CVX down 74 cents. So you can see it's really having an impact on a lot of these major players. Even 3M is down 44 cents on the day. Nice little drop on 3M. Now, going to the dollar. Let's quickly touch on the dollar. The dollar is still negative on the day, and this is why we made that analysis and pointed out to our premium subscribers last night to be neutral on gold, neutral on the dollar, but ultimately bearish on oil because we were seeing calculation things showing up in cycle calculations that were showing us that oil was due for a drop, but not necessarily the dollar and gold. So you can see perfectly done here, as you would have technically gone long the dollar if you thought oil was going to drop, because remember, there's an inverse reaction there. When the dollar drops, oil generally goes up, but we weren't seeing that. So we nailed that dead on here, as the dollar is basically just fractionally lower today, and oil is really getting smacked hard. In addition, gold is still positive on the day. Granted, it's come in, but yesterday we had a negative bias as of the last 3 days, and we went to a neutral bias because of consolidation pattern on gold. So you can see we knew that was coming, and there you get a little bit of a pop on gold today as well. So really some key calls here in the Research Center videos from the last couple nights that our premium subscribers have been privy to. Now, having said that, I pointed out a trend line on the daily chart to my premium guys last night on the SPY. Now, I'm not going to show you guys that line. Here's the line actually right here on the intraday 10-minute. I'm not going to show you the daily line because it's too important, and really for the premium guys, they have to know that. But nonetheless, when we touch that line, I said every time we touch that trend line, you've had a major or at least a decent pullback in the markets, and sure enough, today was no different. We gapped up, pushed right into it, and look at the fall that's come right as soon as we touched it right up here. That's a beautiful fall. Now, you're making a little in spirit of bearish flag pattern here, although remember, volume is light. We had a blue trend line here. Look at this market. Rolled over, bounced up, rolled over more, broke the 20. That's first sell signal. First sell signal when you break the 20, as I mentioned last night in the videos as well. You got to move down, then you would move to the next spot would be the 50 moving average, at which point you have a little bit of support. If you break the 50, you're going to this blue trend line and this pink line right here. That is at 104.25. 104.25 is support. The market goes right there, and then you're getting a bounce back up. Notice what's resistance. Remember, the 50 was support. Once it gets broken, then it becomes resistance on the upside. So a very, very nice little bounce back here, but nonetheless, you could look at this as a little bearish pattern, and we'll see if we get more downside. Now, the difference today, folks, there's a couple things you need to look for. Number one, volume is light, and today's September 11th. So in general, you look for not a big down day on the market like today. All right, on a day like today, where it's really a memorial holiday kind of day, where the markets are going to be light in volume on a Friday of a shortened holiday week, you're not necessarily going to get the big sell-off that you might want in the market, but what you do get is a flat day or a minorly negative day or a minorly positive day, and that's exactly what we're seeing. Right now, we have the Dow down about 40 points on the day, the NASDAQ down about 9, and the S&P down about 3.5. So you can see just a minor down day, but nonetheless, that is happening here, folks. Now, one thing to watch, if you recapture this 50 moving average in the afternoon, you're going to look for your 20 moving average to be next. If you take out your 20 moving average, you're going to watch for this 105 level. 105 is a key level, as well as this upper trend line here that you need to watch very, very carefully, all right? So this trend line, very, very important up here, and again, wherever the market hits, should we go there? I don't think we'll necessarily go there today, but you never know with buy programs on September 11th. In addition, the president's going to be giving another nighttime talk next Monday night, so whether they hold this market up from really coming in or not, that'll be kind of interesting to see, but Again, you just want to know your key levels. As long as you know every level on the chart that I've had from my premium guys in the chat room today, you're going to be fine out there, all right? There's going to be no problems there as well. So nonetheless, keep an eye on that very, very closely here in regards to these key levels. And again, the chat room today going well with some of these numbers and some of these levels we've laid out for them all in there. All right, so now what you're seeing again, guys, the market hitting this 50. If it closes above that, you look for the 20. If you don't close and you start to sell off, you're looking at the blue trend line. The blue trend line's major. Look at this blue trend line going all the way back here, taking it from this gap. See the gap fill right there, connecting it to these lows. This is literally over a week ago, going back to last Friday. You connect it all the way through here, and it just continues to be the buoy of this market. And sure enough, we are bouncing right back up there towards the 50 moving average. So you can really see how that blue trend line is a master level. If you break that level, I think you come down all the way to 103.50 and then 103 and the 200 moving average. That'll be your general target if you're able to close below that blue trend line on this chart. Now, the 60-minute chart, folks, these are your levels to watch. You can see that trend line, again, sloping up. That comes right into play right up there. I don't have that line on the charts, but as soon as it touched it, look at the sell-off on the 60-minute as you come back in. What you're also going to look for on your 60-minute chart is you pierced this downside support line at 104.50 or so, 104.30, right in that range. And then if you go lower, you're going to look for your 20 moving average. Now, again, some things to watch for the remaining portions of the day. First of all, the light volume is back for the afternoon session right now. Not surprising. Remember, a 4-day week, holiday week. A lot of traders out there are out of here by now, heading for their little vacation spots with their families before all the kids go back to school. Some kids have already gone back. Some go back this next Monday. Starting next Monday, you should have much, much more volume in this market. It really should be back to more of a normal pace, anywhere around the 190 to 230 million area on the spiders. I would think starting Monday, Tuesday, even Wednesday, starting to get back higher towards that mid-250s on the volume side of things. So watch that very closely. All right, just another reminder here, folks. You have to know your levels. You have to know your oil levels. The oil trade was a dead indicator yesterday, and that's why we had that negative bias on oil, and you can see the big drop today on the USO. I mean, that's an ugly sell-off on the USO. There's no other ways to describe it. You actually cut through the intraday 200 moving average like nothing there as it just collapsed all the way down. Couple other things to look at here in the afternoon. Goldman Sachs. Goldman Sachs has come down. It's sitting on the 50 moving average. You need this Goldman to break down. Goldman's had one of the best moves up in the last few days to the upside. What you're looking for, look at this 60-minute move on Goldman. I mean, talk about a move straight up, parabolic. What you need to see is this continue to come in. It's had a nice little sell-off thus far, but it's right at gap fill. Gap fill support is right here, as you can see. Let me draw that in for you guys so you can really look at it. But this level right here, see this level right here? You can see how that's support. If you can break through that, I think you have a good chance of selling off even more so, probably to this level right here, which is the pivot high from this big before the pullback, and then you'd actually go into this level, which would be next as the 20 slides up, up and away there. But in any case, Goldman's a key one here because Goldman's been on a rip lately. JP Morgan, on the other hand, has been very, very weak. Look at the differences in angle. Granted, JP Morgan is still up, but JP Morgan never took out the high from before we fell. Please note that. See this high right here on JP Morgan? That was just going back a midweek. Now look at Goldman's high. That's the same high. Isn't that amazing, folks? So Goldman really been the leader here on the financials, while JP Morgan is a big stock and hasn't been leading at all. In fact, this is a beautiful bearish flag pattern here on the 60-minute chart over the long term that you want to see if that plays out. It's all inside to this move, which I find fascinating because you want to see if this move down and then this move up could possibly be an in spirit of bear flag over the course of the last week or so. If that's the case, you look for a lot more downside on JP Morgan if that's the case. Now, you have to break key levels. Look at, we're on the 20 moving average, then you have the necktie right here forming. There's a lot of keys here that you need to be very aware of. In any case, let's go back to the spiders, folks. You are seeing the market actually getting a nice bid. We're back above the 50 moving average inter-candle. So this is your next spot right here. You're going to look for this 20 right here at 104.80. If you get through that, then you're going to look for the market to move back up. The market is moving back to the flat line. And just one thing again, folks, understand it's September 11th. It's very rare to have a down day or a big down day on September 11th. A flat day is more likely today. I do believe that there's most likely will have that flat day today, especially ahead of the president's speech on Monday. So please be aware of that. Come join the Research Center. Come join the chat room. We look forward to having you. Talk to you soon. Take care.